Everybody get up, it's time to jam now.
Thank you for listening to the TTalks.net podcast, the show that brings you information, guidance, and support to entrepreneur minded individuals like yourself. TTalks.net will give you something to talk about tomorrow. This isn't the daily show, but this is the show where you'll get everything. You'll get a fiesta of a mix with the old and the new. They will give you tips and insights into everyday business, big wins in everyday life. They have a lot to add from bookkeeping to sales, sales management, and sales training, and daily content for listeners to learn and enjoy. We are here to improve your life in business or sales career. Without any further ado,
Introducing the dynamic
Alex
duo.
DeLuca and Rafael Rodriguez. We made it back again, ladies and gentlemen. Welcome back to Tea Talks. Tonight we have more topics. Tax topics? What type of topics are we touching base on tonight?
I think we should touch on just what the heck. We should talk
What the heck?
about more taxes.
More taxes. We only get 30 minutes action-packed action here at Tea Talks every night, so we jump right into the topic. This is 2 more days until taxes are done. Well, rather,
they're due, but you can file on May 17th.
awesome,
So,
ladies and gentlemen.
let's talk about Dodge for a second. I think that's pretty interesting what's happening there.
I know that's what was one of the reasons I was smiling when we went on. I'm just looking at that, man. That is unbelievable.
What did you say now?
Unbelievable. I cannot. That's crazy. Where's my cell phone? It's not in here right now. What's it at right now, Ralph?
I don't know, but let me. I'm actually gonna try something here to see if it works.
Don't try too hard.
No, no, there we go.
What you got?
No, it didn't work.
Didn't work.
No,
Oh no.
well, it could be worse.
Could always be worse, right?
Absolutely. Yeah. So let's talk about Dodge while I'm figuring out this this thing.
We were going crazy when it was. It got up to 8. 3 months ago? Everybody's like, "Oh my God!" February 7th. It was at 8. So yeah, 3 months ago, right on the dot. Jumping up to 10 cents right now. Did cap off at 11 cents. Not a little bit about an hour or so ago. I saw a huge gain in Bitcoin from this morning. I forgot what time it was. Jumped an easy 3 stacks in the matter of what was it,
Hours.
45 minutes or a few hours. That was unbelievable. Ethereum did the same. It's Ethereum, if I pronounce it correctly, did the same thing. But the cryptocurrencies of the world are going crazy, and the Dow is sinking about 13% a day.
Well, one of the things I did wanted to talk, and we're kind of going to have an open discussion today. Just some of the stuff that I have seen come through my office. Number one, if you have a PPP loan and you have not asked the originator of that loan to go ahead and file for the loan forgiveness, make sure you get that loan forgiveness because it's basically 3 or 4 pages that you got to fill out, and whatever PPP money you receive, that will be forgiven by the U.S. government. The last thing you want is to forget about it and have to pay this back. So I do want to caution those people, either the first round or second round, that you do contact the originator of that loan to make sure that you get the documents in order so you can go ahead and forgive that.
And is that what we're talking about in the same terms as paying yourself on the other episode?
Yes, and I think the easiest way to, especially if you're getting a PPP now, the easiest
Mm-hmm.
way is just divide that amount into 10 weeks. That payment transferred to your bank account on a weekly basis. Keep track of it, and don't overcomplicate things. Make it easy. You're supposed
Easy as, paying yourself.
you know what? You can pay yourself and bring the money right back in. So, and it's just for record keeping, just to show
Yes.
it that you actually paid. Because there is a formula which is real easy, that a minimum of 60% is actually paid towards payroll. Well, if you're paying yourself, um, you know,
Mm-hmm.
your payroll. Of course, there's a caveat there. Hopefully, your salary is not above the threshold, and and hopefully it's not. Otherwise, you probably wouldn't have qualified. But um, with that said, just out of curiosity, what do you think for 2020 the small business tax rate is?
Small business tax rate. Guess. Oof. It's not a third. I
So,
couldn't guess, Ralph. You tell me.
as of 2020, small business tax rate for C corporation is around 21%.
21%.
But
Okay.
S corporation and sole proprietor are not taxed at the corporate level, but they're subject to personal income tax levels.
Which is what percent?
Well, it really depends on your income.
Income, yes. What
So,
bracket you're in. Go ahead. Break down as easy as you can, layman's terms, the thresholds and the brackets. Married and single. That's tough.
that's going to be that's something that I will have to definitely prep up because I do not know
Know the numbers.
the numbers by heart,
Yeah.
and there's no need for you to. I mean, for me, is there's no need to know the numbers,
Mm-hmm.
um, but definitely it's something that you really, you should have your tax professional look at
Mm-hmm.
your situation because every situation is different. Because I say that you're on
Yes.
on the 20% bracket, I really don't know what makes up that number to your 20%. And based on your situation, it could be possible that we can bring you from one bracket to another, but that will be more of an individual basis. Um, what are the opportunities or deductions that we're able to go ahead and do?
I love that word, deductions. What can we do? What can we do?
Well, and
Did you know you can write off your haircuts? You taught me that,
yeah,
right?
part of your uniform cost, part of
I look like I got a haircut recently.
well, and they've been tracking down. They've been doing a lot of changes to the tax laws because there's been a lot of a lot of loose ends that you were able to do in the past that you can't do now, and so you're giving in certain places and taking away from others. If I were to kind of look up the 2020 versus 2019 deductions, exemptions, and again, there are just. Oh, I think I lost you there.
Can you hear me now?
Yeah, I can.
I'm testing my audio back and forth from listening on to the Facebook. It came in a little echoed, so I was gonna.
No problem. Well, I have an article that's dated from January 11th. There's been, there was a lot of changes made with the Tax Cut and Job Act of 2017 that made it kind of made it easier this for deductions. So before, you know, to have $24,000. Let's say you're a married couple, $24,000 deduction automatically uh, on a typical home
Mm-hmm.
that you bought maybe 10 years from ago. You might not have between the interest and the taxes and all your deductions. You might not have enough to come up with 24. So one of the things that transpired when this happened was that it really boggled down the home ownership into a certain point. In other words, if you own a condo and you buy if you bought a $200,000 home and you bought a $200,000 home uh, between your taxes and interest rate, you probably don't have enough to really cover, to pass the $24,000 automatic deduction. So that's kind of, it's a good thing and also a bad thing because now home ownership, you're not as rewarded as you were in the past. Of course, there are other things that you can do to
Mm-hmm.
to get rewarded. Being a homeowner. Number one, the appreciation of your property, especially in the last 10 years, we saw, incredible the amount of appreciation that it actually had.
10 years. What about 10 months?
Well, and we're in a we're in a seller's market right now.
Oh yeah, it's crazy.
So a couple things that actually disappears and the $1 million mortgage interest deduction, unrestricted deductions for home equity loan interest, deductions for unreimbursed employee expense. There was some miscellaneous itemized deductions that were taken away. One of the big ones that actually took place was the deductions for moving expense. Unless you're military, that's no longer something that you're able to do.
Oh, you used to be able to write off
Oh
all
yeah,
moving
yeah,
expenses.
moving
Okay,
moving expense. That
something I did not know.
Yeah. Another thing that disappeared was the alimony deduction, and if you have alimony and you're doing your tax
That's not
return,
a huge thing in Florida, right?
well, that's what some people don't realize, that when you hire new employees, you're supposed to communicate to the state any new hire. And
Yes.
the reason why they do that is for
To
child
make sure they're
support.
paying their child support.
Yes.
No,
Which,
that's huge. Yeah, that's huge.
I mean, it's kind of good because it allows, you know, that kid to receive what they think is a fair share of the parents' income.
Oh yeah. Oh heck yeah.
Um, but back again, let's go back to. So it's around 20%. A lot of people, depending on the type of business that you have, I always deal with small upcoming companies. I love companies that are from zero. They're from the ground up. They started with us. Zero. Our highest revenue customer that started with us 11 years ago. It's at around almost $8 million.
Say that again.
$8 million.
And he
Zero.
started with you how long ago?
Almost 11 years ago. Our first customer.
And what industry are they in?
They're in the manufacturer distribution. They kind of have
That's
grown.
awesome. What a great story.
Oh no, it's. I mean, that's probably our biggest success story that we're pretty proud of, and we gone through trial and tribulations with that individual, and it's always good to know that it's not only a customer but a friend, and we anything that individual asks for, we're going to provide, and we're pretty tight with the management team that we actually helped recruit. Some of them even 6-7 years ago, and they're still
That's
there.
awesome.
Yeah. So, um, Yesterday I know we had that Florida Department of Revenue story that we shared.
That was a good one.
Huh?
That was a good one, and whoever is listening, it could be eye-opening
I hope so because
experience.
it's a hard situation to be in,
Oof,
as because you know we try to
say
tell
it lightly.
people we to try to go the right path, and it's not like they're not gonna find out,
Yes.
and they can go into your bank account without you knowing, and they can actually
They can
literally
see everything.
they can see everything. They
And
they
what about if it's in an offshore account?
um, if it is offshore account, they might have an issue trying to get, but they can get into unless they're like from the Swiss. But that's not my cup of tea.
No, that's crazy. What was it? The reason I was brought that up, I was having a conversation about betting in Florida. Are you able to drop sports bets in the casino in Florida, or no? You can only do bookies online.
I believe you can, but that's not my
Yeah, and we were talking
expertise.
about all the offshore bank accounts from the online gambling and whatnot. That's crazy.
And you asked me about, so what kind of corporate range could it be for an S corporation or sole
Yes.
proprietor or an LLC? And based on this 2021 article, it could go anywhere between 30 to 37%. And I personally have seen 36%.
Yeah, over a third. Yeah, you push it for sure.
I've seen 36%.
Oof.
The ideal is to keep it within 10 to 15%,
Okay.
if not lower. I mean, we got to pay our fair share of our taxes because unfortunately, and you know, we got to pay our fair share.
That's it. What
So
do you say to somebody? This question came up. You run your own business. Is it worth paying yourself as a W-2 employee for tax purposes?
it's actually a good thing and a bad thing. The one thing I will
Explain both.
one of the things that could happen is that if you've been already working, and the reason why you're paying yourself W-2 is because
Hmm.
either Social Security, making sure that you're paying your taxes. Um, if you're already maxed out on your Social Security, then a W-2 probably is not a good situation
What
to.
do you mean by maxed out?
Okay, so and typically what the Social Security will do is that they'll look at your top 10 years of
Hmm.
income and contribution to go ahead and determine what your pool is from the Social Security. So
Okay.
if you're already maxed out, putting more contribution is not going to do anything to your Social Security. So the only reason why you're paying as a W two is to go ahead and kind of get an advance on your tax liability that you have, um, which you should do if you're a sole proprietor and you're not paying taxes,
Hmm.
and you know that you're going to owe taxes. I just had one of my customers that I had told them to just make sure you do a quarterly payment. They got penalized 10% of the amount that was due because
Oof.
they did not pay part of their liability throughout the year.
That's crazy. How do you track something like that?
How do you track it?
Yes.
Well, you
Check
should
that one
track.
off.
Well, you should be tracking on a monthly basis. Every time you close your books, you should know what you made, what you didn't make, and what you're carrying over, and then and again and again and again. And all it is just taking that, either if you pay yourself, take 5%, set it aside every quarter to send it in, or whatever you owed the year before, you divide it by four and you send that every quarter.
Okay. And that's how you get ahead of the tax game.
Well, it helps you. Not only that, but yesterday we talked about when is a good time to start planning for taxes.
Yesterday.
Yesterday, exactly. So what you want to do is that you don't want to get caught with your pants down, saying, "Oh my God, now I owe $11,000." And hopefully, if you owe $11,000, you probably saw a lot of money coming through, your hands, and easy come, easy goes. A lot of times
Yes.
what happens is that when money is coming in and it's coming in very rapidly, you're spending it also very rapidly, and if you're not keeping a measure of what's coming in and what's going out, and a lot of times what people do is that they'll go ahead and plan their expenses based on the money that's coming in today, not necessarily
And they
what's
don't think
coming.
about the taxes.
Well, they don't think about the taxes, but what about 6 months from now? Are you going to
If
still
that
have the
money's not
same?
coming in,
Are you
right?
going to have the same money coming in? So
What was I going to say? Keep going. I had a great question. I forgot, but keep going.
you forgot the question.
Yeah, you keep talking. It's such great information. I'm listening. I'm paying attention, and I just forget my questions. But no, this is all great information, ladies and gentlemen. It's 10:22 Eastern Standard Time. You're hearing myself and Rafael Rodriguez from the south coasts of Florida, from Naples to Miami, giving you some great tax advice. Tuning in. Please, any questions, comments, let us know. We'll bring it up tomorrow. We are going to end this week talking about taxes.
Ouch! And one of the things that happens is that in order for you to have growth, um, you might need an injection of funds or some type of working capital. And one of the things that you should look into is making sure that credit is king. Um, and SBA does provide the facility, especially with this COVID-19 that came in. They actually relaxed a lot of their stringent guidelines that they have,
Hmm.
and as long as you have good credit, I mean, they were basically giving out signature loans for $150,000. Now, just imagine if you, and of course, you have to be able to justify that you can pay that $150,000, but that $150,000 was over a 25-year period. It was at a 1 or 2% interest rate, or three. It was even more than 3%.
Hmm.
So that injection of $150,000 to your business, that you can probably use it as your credit line. Yeah, it makes you breathe a little bit easier. Now you have a little cushion that now you can focus on future instead of focusing on today. And a lot of times that's what we need in order for us to grow, is kind of start planning for the future. And again, SBA loans going to require you a minimum of 2 years, tax returns, personal returns. A lot of times they're going to be asking you for 3 years, and you want to make sure you have the things in order. And this is where planning really comes into play, because most business owners, what they want to do is that they want to pay the bare minimum in taxes. But if you know that you need to borrow XYZ amount, well, if you're losing money every year, who's going to lend you money?
Hmm.
Oh, because you don't want to pay taxes. So
Yep.
you're killing yourself, trying not to pay Uncle Sam, and now you're limiting your ability to go ahead and use OPM.
Now, being in business, when you talk about paying yourself and paying taxes, what's that magic number? Like, what do you want to stay around a bracket? Do you want to pay yourself 80 grand a year and pay taxes on that? What's the what makes you look good?
Well, the IRS will definitely will love for you to pay 36%. But
Yes, 36%
ideally,
of what?
of anything, they'll love to get as much money as they can.
Yes.
But ideally, you got to be at 10 to 15%, and it really depends on you know on your bottom line figure.
Bottom line revenue or
So
bottom line profits?
bottom line profit. So
So bottom line profit means that's before or after you pay yourself.
that's after you paid yourself.
Okay. So now we're talking about doing taxes twice,
Well, it
personal
depends
and
on
business.
the type of organizations you have. So if you're a C corporation, then you're gonna pay taxes on what you're gonna pay double tax whatever.
Well, even if you have a DBA and you pay yourself, you're paying taxes if you want to do towards that DBA and towards whatever you paid yourself.
Well, on the DBA, what will happen is that any money that comes in is actually under the DBA. So then you take your deductions from there.
What are you able to pay yourself from your DBA just like your LLC?
I mean, you can, but basically, all it is just an expense. So, hey, let's give you an example. If I
Yep.
made, if I my I'm a sales guy, and I made $60,000.
Mm-hmm.
Out of that $60,000, I paid myself $40,000.
Mm-hmm.
That's just coming from the top line.
Yes. As a salesperson, you still have expenses.
Yeah, no, and then you can deduct your expenses. So then
From
that means
which line?
that will mean that $40,000 will go in as your W-2, and I'm using the example that you're saying, paying yourself as a W-2 employee. I imagine that's
Well,
what
now
you're saying.
now you're bringing that back up. Go ahead. Yeah.
So what happens is that $40,000 that you just paid yourself is not really $40,000. It's actually more like $50,000, 53,000 because you got to pay yourself. You're paying in to the IRS. The company is also, or your DBA or your payroll, you got to put the other percentage in there. So it goes down to around 15% additional in cost.
Mm.
In a situation like that, that means that you didn't really pay yourself $40,000. You paid yourself around 55, 56. And most of it you're not getting back. And it all depends, what bracket you belong. You could be getting everything back if you got enough deductions. I mean, and again, every scenario is a little bit different, but that's why you got to be careful and look at the scenario. If you haven't put into and you're wanting to do Social Security, because there's other ways of doing that Social Security by doing a 401, an IRA. Talk to your financial planner. They can go ahead and set up a plan that might make more sense. That instead of paying yourself as a W-2, that you pay yourself in a different manner that will get you more gains. If you would have put $40,000 in Dogecoin, last year, you probably would have around $500,000 today.
Isn't that phenomenal?
Oh, actually, I'm glad that the
Cryptocurrency is the only way you can become a millionaire off of $5,000.
And you know what? It gives the opportunity and the Robinhood, and because a lot of this wasn't available to your normal layman's person, 10
Well,
years
dude,
ago.
the technology is crazy, and everybody's coming up with what is it? I read an article just before we jumped on about meteor sightings becoming more of a thing because everybody has a camera on their front door, so it's catching these things, right? So you have Robinhood, everything's accessible. That's what we talk about in the digital realm. When we talk about digital marketing, everything's in front of you. Boom, now, wham, bam, thank you, ma'am. Any words of wisdom to end off tonight's tax tea talk topic?
Prepare. You still got time. I'll take the next 30 seconds to say we just signed up a client today. They're trying to get an SBA loan. They actually make money, but they haven't filed tax returns for the last 2 years. They don't have financials, and now they're in a hurry to try to get the money before the money runs out.
Oof.
Exactly. So with that said,
Womp womp. Should have did your taxes.
Thank you for tuning in to ttalks.net. If you have any questions, comments, or something you want us to talk about, email us at raphael@ttalks.net or comment below. Please follow us on YouTube at ttalksnet and Facebook at ttalksnet. Please rate us and don't forget that sharing is caring. Thank you for your support. Till next time, we will T-Talk later.
Ladies and gentlemen, thank you once again for tuning into Tea Talks. My name is Alex DeLuca, and we'll see you tomorrow.
And this is Raphael from Hollywood, Florida, saying good night, goodbye, and hasta mañana.